How does a long SVXY position perform in a sideways market? One could argue that we might face a range-bound market in the coming years. Thanks. Really appreciate the insights. So it depends how sideways it is. What I mean by that is, if you were to imagine a scenario where the stock market is literally flat, let's just say it can bounce around between 3%, bands, but it's within a 3% band for 2 months, as an example. In that position, the S&P 500 made nothing, right? It bounced around and it's in the same spot as before. Almost certainly SVXY would have done pretty well during that period, because you have to remember that vol ETPs are trading based on VIX futures. And that is a constantly rolling cycle of a 30-day maturity. Every day it buys a little, sells a little, it moves down the curve, front month expires, moves to the second month, goes down the 30 days again. It's always happening. And in that scenario, where the stock market is just chopping around sideways and not doing much of anything, those VIX futures are almost certainly have high roll yield, which means that the SVXY, the volatility ETPs, are going to be doing their normal thing. So that's why I said, how flat are we talking about here? Are we talking about up or down 3%? SVXY would do just fine in that environment. It would probably make a decent chunk of money. If we're talking about up and down 15% and it ends up at the same spot 2 years later, that could be a different story, because in between there, you're going to have some pretty violent VIX spikes, and that in itself could hammer the volatility ETFs. So define flat.